Ladies and gentlemen, put your hands together for the talented, the hilarious, the incredibly good-looking Mo Money.
Everybody, take a seat. Thank you. Yes, everybody, take a seat. Come on now. Thank you. Come on, cut it out. All right, thank you so much. Welcome to episode 4 of Mo Money. I'm your host, Matthew Morgan. Just call me Mo. Thank you so much for everybody, all our continued viewers, continuing to join us on this journey. This is your first time watching. Welcome aboard the SS Financial Security. Hopefully by this point, you've taken time to do a little research. You opened your own account. This is your first time. Go back and check out my videos. And hopefully you've had some time to look at your income streams. You know how much money you can set aside to put towards investing. Awesome job. Today we're going to be talking about birds and the bees. Wait, no, that's not right. Wrong animals. We're going to be talking about the bears and the bulls. And I'm not talking about Chicago sports franchises. Chicago actually is one of the most important cities for financial markets. Probably the reason why they're called the Chicago Bears and Bulls.
Gotta look into this now.
So we're going to be talking about the bears and the bulls and just simple market psychology. Now, I'm not going to be your therapist like Dr. Lipschitz or Dr. Phil. I am going to be your mentor. I'm going to be the Mufasa to your Simba, the Yoda to your Luke, the Mr. Miyagi to the Karate Kid, Alfred Batman, Irv Blitzer, the Jamaican bobsledder, the Vito Corleone Michael, the Chaz to the John, the Figini to the Corey and Eric, the Averia to the Dante, Dumbledore to your Harry Potter. Now, investing in the market can cause a lot of mental challenges, especially millennials such as ourselves who have seen their share of scary, shaky markets, including the dot-com bubble in 01 and the housing bubble in 07. A bear market usually marks a time of selling, pessimism, and lower lows for the market. Now, a bull market is the opposite. It is a time of high optimism, higher highs, a lot of buying, increase in GDP, everything's going good. Back in the 1900s in the West, people supposedly used to tie bears and bulls together by the legs and they would make them fight. Why? People were bored. People are just fucking shitty as it is. I don't know. Don't ask me. Now, after a bull market has run its course, you can often see a pullback, correction, or even a full-blown crash. This is all part of the market efficiently fixing itself. Do not worry though. Bear markets only last around 15 months on average. Bull markets can go as long as 20 plus years and easily make up for any of your losses that you took as long as you're investing in good and profitable companies. Apple is not going anywhere. General Electric, Verizon. Even if you invested in IBM 35 years ago at less than $20 a share, that stock is still over 130 today. IBM hasn't even been relevant since the 1980s. I have no idea what they do now besides make a super duper smart computer that wins at Jeopardy and sings songs with Bob Dylan. Do not take long shots. There's bears, bulls, and they're pigs. Okay, pigs are people that are greedy. Jim Cramer had a great quote today that said, in a bear market, bears make money. In a bull market, bulls make money. Pigs always get slaughtered. Now, you're gonna need a few tips to handle yourself and keep your cool so you know what to do in any type of market. You do not want to be a fogel.
It's 10:33.
And have no idea what to say or do. Here are a few tips to keep your cool when you're about to blow your lid. Tip number 1, do not panic.
We're just getting started, nigga, don't panic, but don't panic.
You are young, you only have time on your side to make up any losses. Pulling money out when times are bad will only hurt you in the end. Remember, it's about buying low and selling high. Not buying and then freaking the fuck out when it goes too low and selling and getting the hell out of the market. Terrible, shitty idea. A lot of people who lost money in the Great Recession and pulled everything out would have a hell of a lot of money right now. If they'd have just rode it out, even when times are bad, kept going through hell, there was a lot of heaven, the upside on the other end. The market will always rally back. Even if Bernie Sanders becomes president, the market is not going away. He is against corruption and dangerous speculation in large banks, not against the stock market in general. Tip number 2, do not be overconfident. It is impossible to time the market, and it is impossible to always be right. Even the guys like Buffett, Icahn, they only get it right 5 out of 10 times. The key, cut your losses short, okay, and you let your winners ride. Also, don't let someone else's overconfidence sway you. Just because they have some hot tip does not mean that you shouldn't do your homework because your dumbass best friend told you it was a good idea. Tip number 3, loss aversion. Definitely applies to me. I hate to be wrong, and I hate to tell people that I'm wrong. Nobody wants to admit defeat. Okay, you may be down as much as 20% in an investment for a good reason. You continue to buy it because you don't want to be wrong, and you are just shoveling your money into a fire. But sometimes it's best to cut your losses and move that money that is left of that investment to a much better investment. Sometimes you gotta rip the band-aid off. You gotta stop the bleeding. You gotta abandon shit. Do not get hung up on being right. This is your money. Be smart with it. Alright, rule number 4. I gotta say it. Diversification. You can't put all your eggs into one basket. You know, you gotta sow many seeds to get a full crop. I'm not really sure how that... There's a saying there. It's good to have a portfolio that is equally balanced in many different sectors, stocks and bonds, stocks and ETFs, stocks and mutual funds. It is never a good idea to have all your money in one stock. If things go wrong, you are going to get fucked hard. Look at hedge fund billionaire Bill Ackman, arrogant dumbass who continues to shovel all of his investors' money into a company called Valiant, and he has lost them over 30%. He refuses to admit that he is wrong. He just continues to be like, no,
it's a good idea.
Okay, know when you're wrong. Be man or woman enough to admit that it is a bad investment. Pull your money out. When investing in the market, you're going to have good times, bad times. But remember, you're an investor, not a trader. Investing is not your job, okay? You're not a hedge fund or a portfolio manager. You do not have to freak out about every little thing like they do. It's a great idea to watch CNBC and Bloomberg to keep yourself informed, but remember, they have to entertain. Don't let their panic or their euphoria persuade you. Don't check your portfolio every day or you will go crazy. Take a step back, just keep putting money, keep investing always, and let time and compound interest do its job. Okay, like Warren Buffett said, our favorite holding period is forever. And that's a guy that made a couple bucks in his lifetime. Another great quote from Jesse Livermore, considered one of the greatest investors of all time. He said, "It was never my thinking that made the big money for me. It was always my sitting tight. Investing is not easy, especially when something like your money and your future are at risk. Remember though, investing is a long journey. There'll be a few flat tires. Don't get off at an exit. You will get to that destination of financial security." In honor of Black History Month, I could not let the month pass without mentioning Oprah Winfrey. Billionaire mogul. She created an absolute media empire with her television show, production company, TV channels, magazines, writing books, countless philanthropic projects for Oprah's Angels Network. Okay, everybody already knows her rags to riches story. Okay, she is considered to be the world's first ever Black female billionaire, and recently as the world's richest self-made female billionaire, killing it. But here's the real Oprah effect. Back in October of 2015, Oprah announced to buying a 10% stake in Weight Watch. In less than a week, the stock went soaring up 170%. Okay, Oprah's return on her investment was over $500 million. That is the Oprah effect. In honor of Black History Month, the coolest woman in TV history who's been welcomed in millions of living rooms over the past 30 years. May she continue kicking ass, Oprah Winfrey. Thank you so much for watching this episode of Mo Money. Hopefully I did my job of entertaining and informing you. Always remember, sit tight, keep your cool, don't blow your lid when things are going bad. If you have any questions, feel free to post them in the comments section below. Subscribe, share, like, tune in next Friday for another exciting topic on the investing show for millennials by a millennial. Mo Money, signing out.
Always broke, remember we always broke, remember I'm coming back, I'm taking all steady.
I got broads in Atlanta, just at the V, credit cards in the scammers.
All steady.
Legacies, family, wait and see the like a planner. Going out like a Montana, honey killers on the helmets. Legacies, family.